All right. This lesson is going to cover reading the tape and essentially being able to interpret live market orders and live order flow to understand how the markets are moving and where they might be moving next. Spotting aggression, spotting the difference between real, let's say in air quotes, real buying and selling versus kind of fake or manipulated buying and selling, or just outright, what's the best word? Kind of what would be best way to say it would be the type of buying and selling that has impact versus the type of buying and selling that doesn't, right? Because not every $1 million, $1.5 million order is the same, right? And they don't all have the same impact. There's a number of different factors that go into it. So we're on Agar Trade here, the website, which is free to use for anybody. The URL is there. It's been posted in the Discord chat multiple times, v3.agar.trade. You can then have a number of templates for it. This isn't how Agar looks as standard. Agar is, if you load Agar up and you go down here to the bottom, it's essentially a number of different panes that you can move. Okay, so you see this here where I've got the cursor, that you can move things around. So you can have a chart, which is this one. You can have a chart for CVDs. You then have a chart or a pane for different things like liquidations, which is this. Purple ones are long liquidations, green ones are short liquidations. And here is the actual live market orders coming in. So this just happens to be the way that I have it set out, and I have that as a template as well, which I can share. So that when you load, if you want to use Agar and you load up Agar, you simply go into settings and you want to then go to these workspaces and you want to import a new workspace, right? So, oh shit, what did I do there? Let me see. All right, fuck it. I can share basically with you where you can add it here. So yeah, it's just a .json file, and you upload it here. So I'll put that in the chat after I upload this video. So I fucked around with this. I've changed this. I'm not sure what it was before, so I'll watch the video back. It's at 100 milliseconds now, but it probably was like 1 millisecond or something. So anyway, what's the point of all this? Well, if you're a scalper, day trader, it's very important to understand not just how the markets are moving, but also why, who's moving them. So what exchanges are particularly busy, what exchanges are quiet, and what can you glean from that? What does that mean? You want to see who's leading price, who's lagging price. You want to see what is spot doing versus derivatives, because this is a derivatives driven market, but spot flows are what kind of underpins it. So on a day-to-day basis, derivatives drive the market, but on a long-term fundamental basis, it's spot that drives it. So over time, if you see heavy spot buying sustained, then it's a buy the dip scenario. So any dips you get in those type of market environments tend to be leverage driven. So liquidating derivatives, stopping out longs, and vice versa. If you see a pretty quiet spot market and a lot of derivatives activity, it tends to signify that the market, if it's moving in an overextended manner, it will reverse. So there's nothing wrong with a quiet spot market if price is kind of grinding up or grinding down, or it's fairly balanced. That's fine. But if you see a very active derivatives market, and a quiet spot market, but price is moving sharply up, it usually signifies that a drop's coming. And if price is moving sharply down, it signifies that a bottom is close and we should short squeeze soon. typically just on a candlestick chart, that's easy to spot. If you just look at it here, let me just go to a 1 hour chart, let's say. If you get to, let me see, where is that? I've got, what is it? Oh yeah, the execution's on from a demo trade I was doing. So let's say for example, you've price moving down like this. So in this leg down, if you were watching the tape, listening to the tape, and you saw a lot of spot selling, which we did at that time, that's what was happening. There's a lot of heavy spot selling and derivatives. Everything was just selling. You'd indicate, okay, even though it's moving with a bit of velocity and kind of gapping down, the bottom's not quite in yet, which it ended up not being. We kind of grinded around for another little bit. Then we had a couple of spikes down, namely here and here. I want to remove those. It just annoys me. The execution thing. Alright, there we go. Namely here and here, we had a couple of drops. So, but at the time, these, whenever we got, so this here was still heavy spot and heavy derivative selling. This is, if you're following in the group chat on the Discord, I've been posting, or was posting, that this was like capitulation of all spot and derivatives. But by the time we got down to here, this wick and then these further ones, it was pretty much all derivatives selling, and spot was just fairly quiet. There wasn't a lot of spot selling, or wasn't a lot of spot buying, which then gives you that first bit of confidence you want, because you can also see the price is not moving as rapidly as it was before. And that's because there's just a general lack of interest in selling at these points. There's not a huge interest in buying, until we got this impulse today, but there's not a huge interest in selling. So you see this price then beginning to slow, and the tape getting a bit more quiet. So if you talk about the tape being, the common terms you might hear me say it, would be tape fast, tape slow. So that would indicate, and I'm going to turn this up a little bit. You might want to turn your volume down on your speakers, depending on how loud it comes through on your end, but you need to be able to hear the tape. This is the tape, that's the noise. Okay, so this is a program, proprietary bit of coding done by a very talented coder, and he has essentially aggregated all the major exchanges and put together the market orders into a format that they come through both visually, where each trade gets aggregated and pulled from the API of the exchange and put through onto this system, as well as then a sound-based system. So you can edit the sound on your own. I just keep it the way he has programmed it. But if you listen, there are a number of different sounds. So sometimes you're hearing a little click, sometimes you're hearing a pop, sometimes you're hearing a bing, like that. They all indicate different things. They indicate buying, selling, and they also indicate different exchanges depending on the sounds. So you can get used to that by going into your settings and listening to which one's which, and then you'll be able to tell what exchange is doing what. But you don't need to do that, because you can also just watch. So if you're watching along and you're hearing the pings and the pops, but you're also looking at the exchanges, you can see what's happening here. So you can see the trades themselves, okay? And I'll turn this down again, just so you already know what the sign means, so I'll turn it back down for a sec. The trade comes through, obviously the price that it was executed at, and the size, the value. So the value is in dollars, and if you tab over it, you can see it in Bitcoin. So you see here, 17 Bitcoin order, which is $1 million at 60,081 on OKEX. So the bit on the left is the logo of the exchange. You can learn the logos of your exchanges and be able to trade better on these. Along the top, you can see all of the exchanges. You can see FTX, which is this one, and I'll go from right to left. There's Huobi on the right, then Bybit. Obviously, actually, they move too frequently to be for me to give an accurate thing. But you can find out the logos yourself, what they mean. The most important ones are the three blue lines, okay, which is along the top in the middle here. You can see them there, 3 blue lines. That's Coinbase. That's one of the most important. FTX, obviously everyone knows the logo. Binance, everyone knows the logo. Bybit is the golden, those weird looking kind of golden circles with little slits out of them. That's Binance. And then BitMEX, way over on the left, at the bottom of the bottom of the rung in terms of price. BitMEX is another important one. Then you've got the other ones: Huobi, OKEX, Deribit. Bitfinex is the leaf. Greenleaf is Bitfinex. Obviously, you can find that out for yourself, and then as you go along, the main thing is just to be mindful of these and to constantly be looking and listening and seeing what's happening with price. Okay. I'll go very quickly through my personal order of preference in terms of what exchanges trading and what it means to me. For me, Coinbase is number one. Coinbase signifies the US investor base, and typically US, whether it's institutions or just large players, Coinbase spot market is the most reliable and accurate market of all. There's no leverage available. There's no there's minimal wash trading. There's minimal kind of fuckery on it. There's fuckery on a lot of exchanges, but Coinbase would be the least. It's the most regulated out of all these, even though it's still an unregulated space in general. But Coinbase, as you can see by the really tight KYC laws, etc., is typically wealthy traders or well-off traders or whales or institutions or funds or whatever you call it in the US who want access to Bitcoin. So Coinbase takes precedent over everything else. Following Coinbase, personally, I would have the next most important as Binance Spot, but not super strong. Okay, nowhere near as strong as Coinbase Spot is, even though Binance Spot's volume is much higher than Coinbase's. The thing is that just a Binance Spot doesn't tend to move the market. It can, of course, move the market, but it doesn't tend to move the market appreciably because Binance Spot is typically dominated just by a combination of either market makers or miners selling. Miners typically sell their coins either OTC. If they can't sell OTC, they sell them on Coinbase. Binance. They sell them on Binance because Binance is the most liquid market by far. But you have to understand that the market doesn't move because based on the exchange that's trading the most volume. The market moves based on the exchange that's trading with the most aggression. Okay? If you look at a good example would be Coinbase and Binance. Okay, so Coinbase in a typical day might trade 10,000 BTC as a figure, so as a BTC figure, which in dollar value, like at the moment, would be 600 million. All right, so they might trade $600 million of volume. Binance could trade 50 to 100k Bitcoin on spot exchange on a typical day. So obviously it's much higher in terms of just base volume, but the volume's less impactful because of what it means. A few reasons for that, like your books will be more stacked on Binance. So even though there's higher volume, also there's way more liquidity on the books, which means that if you went and just put 1,000 BTC market order through on Binance, you'd move the market, yes, but you wouldn't move it appreciably. If you put 1,000 BTC market order through on Coinbase, you'd slip the market several $100s, which would then mean that market makers have an opportunity to arbitrage, because let's say I put 1,000 BTC order on Coinbase, and let me pull up CryptoWatch to show you the books live. If we look here, you can see all the books. So top left is Coinbase, which is the one we're going to look at, and third from the left on the top row is Binance Spot. Okay, so they're the only two we're going to look at here. Ignore the rest. If you look on Coinbase here, so this is how many BTC is available at each price, and then the green bar that you see on the background, that's kind of the cumulative amount of BTC. So it's kind of in visual format rather than a number. Excuse me. So at the bid, we've got like between 1 and 2, 3, whatever. Now it's like 40. So Coinbase is pretty stacked on the bid side for being that close to the market price. But if you see here, right the way down to the bottom is 114, there's 5, 7, 10. So in total, there's a few hundred BTC on the Coinbase books. And that's between 57.7 right to up to 60k. So if we look at Binance, and I change the sentence to 100 to be the same, all right, you can see that, well, there's a big stacked order at 20k, which is kind of worrying. But there's always, no, wouldn't worry. Typically the books are like that because people put bids in just in case there's some kind of catastrophic nuke. But if we're looking here, you can see Binance down to whatever 54 is. Well, actually, no, the data's not really great here. It's a bit choppy. So let me just scratch what I was doing and go back to 10, and I'll just go to 10 as well on Coinbase, and we'll get a bit more relevant data. All right, sorry about that. Okay, here we go. So Binance BTC USDT is actually, well, this is actually a pretty strange occurrence. Binance is really actually less liquid than Coinbase at the moment. So that's quite rare, quite a rare occurrence. Typically, Binance is much more liquid, as in the books have more orders on them. So probably not the best example for right now, but you'll take my word for it that in general, there's more liquidity on Binance because there's a much higher volume traded every day and there's more participants, there's more people using Binance. So what was my point with all that? My point with all that was that I believe, and the data backs it up, that Coinbase, whatever happens on Coinbase in terms of orders and on the books is more impactful than Binance, okay? All right. Now, following that, the next most important exchange is probably a derivatives one, but I will put the caveat that Bitfinex is also quite important because Bitfinex, though it's an illiquid exchange in general, in that there's not an awful lot of trading conducted on Bitfinex, when they do have trading, it's very impactful. Okay, so the times at which Bitfinex jump into the market, which we can actually jump in here and go look at it. If you look at Bitfinex's books, they're typically very shallow. The volume's very low, but it picks up at key times. Okay, you'll all of a sudden get a lot of action on Bitfinex. And let me delete all these old CVDs. Don't need them right now. So if you look at the volume tab along the bottom, you can see that Bitfinex doesn't do much of anything, right? See here, Bitfinex doesn't do much of anything until it does. And when it does a lot. And then it goes back to doing nothing again. So Bitfinex is a market makers exchange, all right? What that means is they move the market by having stacked orders, stacked bids and stacked offers in various places. So if you look at it on the live books, which we'll do in a sec, you'll see that Bitfinex always have a very big sell wall and a very big buy wall, but it rarely ever gets hit. So this goes back to how markets actually move, okay? And there's two ways that a market can move. Market can move with aggressive orders, all right? So you can either move a market by having a wall of, let's say, sellers here. So that's, let's say at 81k, there's a wall of whatever, 100 BTC, and price is trading here. The way you can either move price higher by putting, let's say it's 100 BTC and we're just one tick below that, and you put in a 200 BTC order, well, you push price up through that 100 and up to the next, and through the next, and through the next, and through all of the books until we reach a point where the 200 has been used. So say there was another 50 here, and there was another 50 here. Price would go all the way up here with your 200 BTC order and move it from 81 up to 84. Obviously, that wouldn't happen in reality, but just bear with me for this. That's one way that you can move a market, okay, with aggression. The other way that you can move a market, which is most of the time, whenever there's not a lot of volatility and for in ranging environments and its price isn't, there's no aggression, there's no impulse in either direction, and price is just trading here, all right? You can move it by having walls either side, okay? So you have a wall of buyers, let's say 1,000 BTC. That's typically what they do. I shouldn't really have done that. You know what I mean, right? So 1,000 BTC and 1,000 BTC here. Now, typically to move the market, it's going to take like on a normal day on a normal exchange, there wouldn't be 1,000 BTC above price and 1,000 BTC below price. There might be five above, 10 below, 20 on above that, 30 above that, 10 below that, 20 below, just regular amounts. If you slap a big buy and a big sell wall and it's on a quiet market, there's not going to be enough aggression to push through it. Okay, that should make sense. If I put 1,000 BTC here and 1,000 BTC there, and there isn't enough people in the market who are willing to market buy or market sell over 1,000 BTC, then price will go nowhere on that exchange. Okay, so what that means is you can move the market without actually spending any money in a perfect scenario, in a perfect setup. That's not a common occurrence long term, but in a low volatility ranging environment, like let's say like here, that will just be being moved mostly by bids and offers being moved. Okay, so if you go back to that example and we had 1,000 BTC, let's say we had 1,000 BTC here, and let's go into the 1 minute chart on this. If I had 1,000 BTC resting below this low, and I had 1,000 BTC resting here, price wouldn't move. But if price comes up like this and I lift my offers, okay, you might hear that term, lifting the offer. If I lift my 1,000 BTC up to here, then price can go back, can continue up through the books. But if I leave my bid below, price can't go down into that because there's not enough aggression to sell into it. Then obviously if I lift the offers and price jumps up, I then raise my bid up with it. And that's how you can gradually move the market up. Okay, so which I'll cover in a sec by going into the order book software trading light. But I wanted to get back to the point of the main point of this lecture video, which is about the tape and reading the tape and interpreting it. But that was just to show that the liquidity matters, and typically Binance is more liquid but less impactful because there's just a lot of trading going on back and forth. Then derivatives exchanges. Okay, so the most important thing we can have as traders is an understanding of what the derivatives market is doing, because really your goal, if you're watching this video, you're not a long-term investor and you're not even really a medium-term investor. Like there's no need for anyone to listen to the tape or to interpret what's going on. If they're let's say that's not technically true. Understanding this is always a good thing and can never be a negative. But you see, like Adam and Dan, they don't listen to the tape and watch the order flow relentlessly because it's not always required. Okay. But if you are and you're in a short-term scalping and day trading and swing trading, and you want to find key highs and key lows and when to enter, you want to know what derivatives are doing. So in order of reliability, okay, so this is in order of how often they get the market right on derivatives, I would have BitMEX number 1, Deribit number 2, FTX number 3, Bybit number 4, and Binance number 5. All right, in that order. So BitMEX typically is the best traders. Deribit has very smart traders as well, mostly Asian based. And when I say the best traders are smart traders, it's really the same traders who just use them. Like Deribit's used heavily by 3AC, 3 Arrows Capital. BitMEX is used by a lot, used by all. It's used by most of the OG traders because BitMEX was the FTX of its day. Okay, so FTX is kind of the hype exchange now. BitMEX was the original. Not the original. There was ones before that, but in terms of this kind of 100x leverage and popularizing that type of derivatives trading, BitMEX pioneered that. Now with their KYC laws and all of that, it's much tougher. You can't just, every ape can't just go on 100x leverage on BitMEX. But if you're fully vetted, you still can. So the smart traders use BitMEX. So if you're following BitMEX's flow, you're typically going to be on the right side of the market. FTX and Deribit would be fairly similar. Deribit better because Deribit don't have as many apes. It's just not as used by as many. But then the counter to that, the downside to that is that Deribit don't have as much volume. Therefore, they don't have as much activity and they're not as reliable. FTX have a very high volume, a liquid market, and a very reliable order flow. but they also have a lot of apes. So if FTX are aggressively buying or aggressively selling, it's not as indicative as BitMEX would be. So if BitMEX are just going ham and buying like fuck, right, I would always be wanting to get long in that market. If FTX are going ham and buying like fuck, I wouldn't always want to be in that market, because it might be Alameda, who are the main market maker for FTX. It might be them that's doing all the buying, in which case, okay, they're going to move the market and you want to be on their side. But if it's just regular apes, because FTX has a lot of normies on it, then, of course, you don't want to just be jumping in with FTX retail traders. So FTX, though, would be one I would definitely pay attention to and use as a good confidence tool. Then we have Bybit as number 4, and you always hear me, if you're in the group and you're following along, you'll see that I regularly bag on Bybit as being the worst traders in the market, which the data still proves that they are. So Bybit are constantly shorting the lows, constantly buying the top. And in terms of order flow, in terms of on the tape, Bybit would be the least impactful directionally, okay? Because there's a lot of, we'll just call it what it is, there's a lot of wash trading and there's a lot of hunting for toxic flow, okay? So there's a lot of toxic flow, which is hunting for liquidity. I'll not go super deep into those terms. You've heard me talk about them before. If you want, I can explain them in more detail another time. But I want to keep this video relatively brief. But basically, when you see the buying and selling going on Bybit, you'll also notice that it doesn't have as much impact as the buying and selling on another exchange would. So simple way of putting it, and let me stop for a second, and I also include Binance in this, okay? So everything I'm saying for Bybit also goes for Binance, and they would be 4th and 5th on my list of importance for derivatives. Now remember, I said already that Binance Spot is a totally different thing. We're now talking about derivatives, which is a leverage platform. It's an exchange with a perpetual market, okay? So we all know what perpetual futures are. I'm talking about Binance Perps, where you can trade with up to 125x leverage, okay? And not Binance Spot, where you just buy and sell, okay? And I know you can use margin, but that's irrelevant to this point. So Binance Perps are much the same as Bybit Perps, where they're really a mixture of market makers and toxic flow, I would say. There is, of course, retail traders, but when you're watching the tape, you're watching for big orders. So in all of this, when you're listening to the tape and watching the order flow come through, you're not looking at the 1 BTC orders coming through from Mr. Pleb in fucking whatever, like in Singapore, who's putting a trade on, or some fucking noob trader in America who's just got around KYC and opened up his first Bybit account and he's about to get liquidated. That's not what you're looking for on the tape. You can find that from aggregated order flow. You can find areas where there's heavy selling and heavy buying, but you look on these tapes, on the tape here, and as it's coming through, I have this program to pull through nothing lower than 250k. So, and that's about what you want. You don't want to be putting in 150k or whatever as the limits, because you're just going to get every single order coming through and it's going to be more noise than signal. There is a particular strategy, if you want to employ it, where you can put in right the way down, which I do at the bottom. I'll scroll down a sec where I have each exchange individually listed. You can put in lower amounts, right down to 50k if you want, and that can help you to look through. If you're let the orders come in for half an hour or whatever, and then you can go back and look through each exchange and see, okay, on Binance, has it been big buys and sells or has it been small buys and sells? Okay, and we'll touch on that in a second. But back to the main point, right? So we now know who's worth watching and who's not. There's also other exchanges. There's also Kraken, Gemini, Femex. There's a number of them, but again, less impactful. I do keep track of them, but in a separate way. So let's go back to this layout for a second. So we've got the chart here, which is a 5-minute chart. It's an aggregation. It might look like weird candlesticks. It's an aggregation of all the different exchanges. So this is the most helpful part of the layout for me, is that it lists them, and you can see it's above, around the candles, it's actually lines. So each little dotted line indicates, if I zoom in enough, you might be able to see it. Yeah. So you've got an actual candlestick, okay? And then you've got the little line which indicates every exchange. So they're color coded. Now I don't expect you to see the colors there, but you can see at the top is blue, and then you've got red and yellow and green. And if you look on the right hand side here, in order with these labels is the order of the price. So you can see at the minute OKX perp is the highest priced, along with Bitstamp spot, and then as you go down, Bitfinex, FTX, Coinbase, Binance, blah blah blah, all the way down to Huobi spot. So the lowest price at the moment is on Huobi spot. That just basically means that Huobi at the moment, in this snapshot in time, Huobi are selling more than they're buying, more so than the rest of the market. Okay, there's more sell pressure over there. FTX, perp, leading the market. Okay, so that means FTX are the ones that are driving it up. Now, if that's been driven by Alameda, etc., then that's great. That's very good news. Obviously, if it's driven by apes, then less so. Now, let me see actually, just while I'm here. Should have FTX spot as well. No, I'll need to try and reprogram that. I know there was an issue with all markets. And here's where you can fuck around. So you can learn a little bit of, it's not learning coding whatsoever. You can basically just figure out how to interpret these and add them into the to the chart. But all this can be done, by the way, on there's like a guide of how to use Agar. If you go on Google somewhere, I think it might be this one actually, the scripting wiki shows you how to update the scripts and stuff. But I want to see if I can get FTX BTC USD for their spot market. I don't know if I can, because there has been an issue with FTX, the data, where it's fine now, but the data doesn't go back. It doesn't go back beyond like last August or something like that. So it might not pull through correctly. So let me see if that's worked. If not, I'm probably just gonna have to live with it. Yeah, it's not pulled through yet, so that's fine. The reason it wasn't all automatically included on the list is for that exact reason. So we don't have FTX spot in this, but we've got everything else. And we do have FTX spot in other markets, like down here on the CVDs and stuff. So that's, so far I've covered what all this shit is, what each exchange means in terms of its impact on the market, how the market actually moves within that, and then also onto the measurements or the size of orders you should be putting into your program for the tape. Now, next, I want to cover the types of order coming in and how you can interpret them. So, as I said, on this particular layout that I have, we've got spot exchanges on the left and derivatives exchanges in the middle, and then on the right is liquidations. Okay, so pretty self-explanatory. Liquidations will come in as and when people get liquidated. If you look at here, while I tab away, you can see that there's a little bear beside it. Okay, so it doesn't matter what color this is. The bear indicates whether it's obviously a long or a short getting liquidated. So bear getting liquidated indicates that there was a buy order, which is why it's green. So you have to buy to liquidate a bear, and you have to sell to liquidate a bull. Okay. So that's just basically a market order going in for 126k, which was obviously somebody's liquidation point. On the left is spot. So typically what you want to do is load this up in the morning, an hour before your key trading time, and set it and let it just filter in all the orders. And you can see that as you scroll, down. As you scroll down through it, you can see that all the orders build up. When you click into the settings tab, make sure to update your max rows. I put it to 1,000. Honestly, if you want, you can put it as high as it'll go. I don't know if there's an actual limit, but the more you can render, the better, and just let it run. And then it means when you come back in and you scroll through, you can see all the orders have been going on. So I've got everything here for the last 33 minutes on spot. So if I left this for another 20 minutes and say it was at in the hour before New York Open, and then I come in 10 minutes before New York Open and say, okay, we're now coming into a period where I want to get on a trade. Whenever the first hour of New York, first hour of London tend to be the good times to trade. So you come in, you say, all right, well, I'm going to take this data in and basically interpret it and see what's been happening. So let's just say from the moment I started this video, so 35 minutes, we've got 35 minutes of data. So going down through the spot markets, we can see that when we were below 60, there was some decent spot buying. Quite a bit on OKX, which is that symbol. Kind of 209, 300, 233, 400k or whatever. Bit of some in Bitfinex. I would like to see that. That's always good. Then we get to 60. You see some more selling at 60. Pretty natural. You hit that round number and go above it. People will try to force it back below. They'll just be happy to sell some spot above 60 for whatever their strategy is. Then you're scrolling on up and you can see there's a couple of big orders. So it's obviously color coded. The more bright and vibrant the color gets, the higher the order value. So in the 1 million, couple of $1 million orders coming in on Binance, I would look at those and say, okay, but that's Binance, less impactful. If those $1 million, $1.5 million sales are coming in on Coinbase, I'd be much more worried. On Binance, I don't typically care because just as quickly you'll see $1 million, $2 million buy come in. So not super impactful. And there you go. We scroll up here and see 1.3 million from Binance on the buy side. As you're looking up, then nothing else kind of outstanding or spectacular that I can see. Binance sell order, big buy order from Bitfinex, really nice to see. That's something that I would take note of. Before it, though, we did have a big sell order and another big sell order. So again, would kind of negate that in my view, because you've got 7 and 5. You've actually got 8 and 5. You've got basically 1.3 million of sells and then a 1.3 million buys. So for all we know, that could be someone wash trading. There you go. There's a nice bit of activity coming in. But we'll get onto that in a second in terms of derivatives. But then I scroll on. We were talking about order flow and these different things. So then we see like a big seller coming in on Bitfinex, okay, and then we see some Coinbase. A cluster of Coinbase sells is always something to be mindful of and wary of at that exact price. So all at the same price, Coinbase dumping in some sell orders, not really a great sign. And by the way, these are for. It doesn't mean the market's going to nuke straight away, obviously, but if you see 60,266, there's a lot of Coinbase selling. Scroll on up, there's another bit here, around 63.50. There's another bit of Coinbase dumping. There's not so much Coinbase buying to back it up. You say, okay, well, Coinbase seem to be offloading a bit of spot in this 60,300. If I go into like a 5-minute chart. So Coinbase are starting to dump 62 and 63. So at this kind of what's looking like it might be slowing down, Coinbase are selling spot. So are they going to end up creating like a local high or a mini high here? And we end up pulling back a bit? Possibly. But we do know the Coinbase spot is selling there. Okay, that's what you want to glean from it. The other thing then, when you've loaded this up and we've got 35, 40 minutes of data and you scroll down through it really quick and just give it the eye test, it's all color coded. You can see, okay, heavy block of buying, block of selling, balance market, buys on sells, buys on sells, buys on sells, balance, 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 a lot of buys, a lot of sells. And then you can see that, okay, it started off heavily buy dominated when we were below 60, as you'd imagine. We got above 60, there was an initial block of sellers, and then since that, in the 60,200 to 60,400, we've been getting a pretty even market of buys and sells. So quite a balanced market on spot. Then we want to jump in and confluence that and compare it to derivatives and see what's happening there. So scrolling, there's always way more derivatives action, so there's going to be probably the full 1,000 filled up already. So if I scroll all the way down, I'll not even go all the way, I'll just go like however far back this was. You can see, again, do the quick eye test. Bit of red, bit of green, bit of red, bit of green, red, green, red, green, red, green. So again, not a super one-sided market. We're getting pretty decent blocks of buying and selling. Now here, we're at a point where we're kind of, again, balanced. So what's important to gather from that? Well, from a scalping, day trading perspective, you want to wait till you get to there's a nice big buy order coming in on Coinbase. You want to wait till you get to an extreme. Okay, so we're not an extreme yet, when we were down here, I'd have been looking. Now at this point, I would say, look, this is the high we're going for. We've put in a bottom, we've clearly bottomed because it's pushed away so hard. The chances of us dropping back here and creating a new low are pretty low because we're probably going to take out some liquidity. So either that's going to be from a local high, as in we've set a high here, then we run it and fall back below, or we're going to take out the main high, which is going to be up here, take that out and go back. Or of course we can just continue higher. But if you're scalping, you're typically looking at counter trading. So if price is going up, you're trying to scalp down. If price is going down, you're trying to scalp up. Okay, you're trying to go against you're going to go against, not the trend. You're trying to basically just go against the market, against the plebs. So you don't buy up here, obviously. You buy down here. So the next place you'd be looking for a trade to be, can we clear this high out? And then I'll get a short on if the tape is telling me that might be a good thing to do. We're seeing another big buy there from Coinbase at this level, another 700k. So where Coinbase were selling in the 60,200s there in a few blocks, we're now seeing some buys come in. So that's good. I would be, again, believing that this is leading us to taking out this high as the target. Another important thing to use this for is just to, in general, have them side by side as they are and see what if there's a disparity. So is there a divergence in spot and derivatives? Okay, and at the moment we can see not really. There's quite a balanced market between the two. A lot of times you'll see, which is perfect, if you're at a low and you'll see a lot of spot buying. So perfect example is when this stream started. We had that. We were below 60. Okay. And I remember this block basically being on the screen. So we had a solid block of all buying below 60. And if I can, look, I'll just scroll back far enough and see whenever we were below 60, what was derivatives doing just before we came above 60. I'm getting to it now. Here we go. So derivatives, when we come on stream, we're selling, and then a bit of buying. Typically, you'll see just before we get the big breakthroughs, which is about here, isn't it? So that's all 60. 60, 60, 60. So in this 59s, we had some selling going on, some selling going on, some selling going on. Selling, mixture selling and buying. Sells, some last minute kind of sells as we get to 60, and then it breaks through. Then we broke through 60. Derivatives kept trying to really short it and sell it, apart from a couple of the big buys. And then eventually, they just took over and joined the party and started to buy up. Again, then put a big block of sells in, but I think that was alongside a block of sells on spot. Yeah, so then everyone was in agreement. So the most important thing, there wasn't a super strong signal there. The most important thing you can look at with that is to have them alongside each other, like this, up to date, and just be watching it. Have it up to date like this and say, okay, is derivatives buying and spot selling? If derivatives are buying and spot selling, you want to be looking at downside to come. If derivatives are selling and spots buying, you want to be looking at upside to come. We see a 1.5 million sell order on Coinbase, so I'd be very surprised after seeing that, plus another few on Coinbase. Coinbase are picking up the selling pretty aggressively, so I wouldn't be surprised to see us pull back from here. And even if we did, if we went higher, it might just be to wick out this high and then drop. But Coinbase don't typically sell that heavily and be wrong. But again, that's not to say that they can't be. But if you look at here, which is the CVD, cumulative volume delta chart, if you've watched my videos again, you know that the white line is the spot markets, the yellow line is just Binance spot, and then the green and blue are the derivatives markets, one of them for Binance, one of them for the whole market. You can see that in the period of time these big Coinbase sells have come in, it's just tanked down the CVD of the spot market. So now we have derivatives leading and spot lagging, not typically a great sign for upside. So unless something changes, unless some aggression comes into the market, pretty soon, we're looking at basically spot selling off while derivatives continue to buy or just continue to stay kind of flat. Typically would lead to some short-term downside. So I wouldn't be surprised to see us in this kind of scenario. And if you then look at your overall charts, this is how you should be doing it. You should be just updating your mental picture of the market constantly. You just say, okay, if we're not going to get, like, we need to really get a pretty solid impulse soon to take us above this high and break out of this compression pattern that we're in, because you can see that we're in, I don't know if I've got all that shit there. You can see that we're in compression pattern, right? So we need to really break out of this pretty soon. And you can see, well, it's not quite as clear along the bottom, but you get the idea. Apart from that wick, we're kind of just compressing. So you need to see this downtrend particularly. You need to see that breaks. You need to see this impulse through. And if we then pull back after and do whatever down here, that's fine. But we've broken out of that compression initially. Otherwise, you're in danger of just coming down here and doing this before a move, which could end up being down or up. You kind of into that unknown zone. So when you're looking at the market along with the tape and the flows, it'll give you a bit of an idea. The way kind of gleaning that, what I would do is look at where price is on the chart. So it's moved up to here, and typically we've had the impulse move. Okay, we've had a bit of retracement. We've had another little impulse. You typically want to see that impulse to make a new high, to continue a trend. Okay, so you've low, high, lower, low. Sorry, higher, low, higher, high. But if we get to that, if we're here and we see price coming up in what looks like it should go like that, and then you're going in here and you're seeing a lot of spot selling, especially from Coinbase, and then you start seeing price like this start to roll over, you're going to be like, okay, now it's looking like the market is trying, whether it's market makers or big traders, each time we try and get up to make a new high, they're selling off. So they're trying to keep us compressed. So what does that mean? Well, with experience, you can figure out that means a few things. First thing I would glean from that is we are just going to continue ranging lower for a little while longer. Okay, in the market we're in currently, I would see that as bullish in terms of there's more accumulation needing to happen. Okay, so there's a misconception that when price is, ranging or in low volatility compression or whatever, that it's just inherently always bearish. That's not the case. So you can see, good example, we know the market's manipulated to an extent in that whenever you get to these key levels here, the market makers will force the price down into here to take out all those stops, and then we'll make the real move. Okay, so we did that this morning. We wicked down, cleared out the stops, and impulsed higher. Okay, then everyone, of course, longs the top, thinking that we're going to 100k, and then it just starts a slow bleed, bit of a sell-off. Just some profit taken from people here. But forget about yourself as a short-term trader for a minute. And just remember and be mindful of what's going on on a slightly higher time frame. So in a higher time frame view from this, what's happening? Well, we're in a low volatility, low momentum downtrend, okay? So we've been trending down, but we've not really. Since this point here, we've kind of not even been trending down, we've just been ranging between 58.5 and 61.5, so we've been in this kind of range. This is an accumulation pattern typically. With the price action that we have, with the impulses, several impulses, okay, impulse, impulse, and impulse. To me, in my experience and what I've seen in the market, that means the market will eventually go higher, but it doesn't mean we'll go higher right away. Just because this impulse up doesn't mean that we have to continue. We can do, and we will do when it eventually goes, but it can just as likely, like it has, bleed out. Another impulse, can bleed out again, can just go into this, or it could even just go lower, or whatever, until we get some other type of impulse, okay? The real way you want to interpret that in terms of flow would be, let's say you're a hedge fund or a big trader or a big player, and you're unsure, because obviously people don't know, like as I said, it's not the same 2 people or 5 people going around a table saying, what are we going to do with Bitcoin today? There are hundreds, thousands of different massive multi-million or billion-dollar funds that trade Bitcoin. And every one of them wants to make money on it. None of them want to lose. So if they weren't sure, okay, will 60k hold? They're going to wait. Okay, and they say, all right, it's holding so far, it's holding so far. It's looking sort of bearish. Maybe this will break down. And eventually then they see this. So they've sat in silence. They haven't been willing to buy Bitcoin here. The more aggressive whales and funds, whatever, they've been buying up here. But then you see this impulse, and it pumps up, and you say, "Oh, all right, okay." There's a bit of a nod from the market, a bit of a hint that there was a lot of liquidity here below here, and that they were willing to buy it up. Okay, they say, "All right, well, chances are now we're not going to nuke to 55k because the market's showing us that we want to stay above 60." But when price gets up here, and they've missed this, remember they saw this, they didn't trade this, they saw it. They'd say, "Okay, well now we need to get our bags filled." So what do? They slap in a big sell wall up here. So they have, put 1,000 Bitcoin up. There's not enough buyers to bring through it because the buyers have been used up to go here. There's not enough buyers in the short term to go there. So they start, moving price down but keeping their big sell wall. Or whatever. It's not the only way, but that's one way. And the point of that is they're trying to suppress the price so they can then get their bids filled lower. So they'll see this impulse. They'll say, "Damn, okay. Price probably going to go higher, market's going to go higher. Let's just try and get filled sub 60. So they'll start pushing price down, and they'll have their bids stacked in here, so that at least they can join the party sub 60. And that's how, if you try and look at the chart and imagine it as a collection of people rather than just an arbitrary random market, you can actually begin to understand why and how a bottom forms and how lower lows and lower highs begin to form. Okay, so I'll take a bit of a sidetrack on this, but it's a good point I want to make. I'll find a bottom that kind of fits the bill in terms of showing it clearly. The 40k one was quite good for this. All right, so this is a really good example actually. So in the beginning we had the nukes down, okay, and there's not anyone like aggressively buying these. These are wicks to liquidate leverage traders. And eventually then we hit a point where there's enough aggression in the market to push it back up and do a short squeeze, which you do. Big players know that this is just a squeeze. The first impulse of this is just typically a squeeze. Squeeze reverses, nukes down into this area. Then we put in a more traditional bottom pattern, which is bottom, crab around, dip down, impulse, and squeeze. And say, okay, but at this point, big players are saying, all right, this is likely to be a bottom. But we're not quite sure yet. Then what happens is we move into like this sustained sell-off. Okay, so this is just basically where all the people who matter, all the people who can move the market, just pulled all their bids. They're not willing to buy. They're just going to let price bleed out and sell off. And this is the point where you're trying to get retail to capitulate their spot, which they always do. And then, but at this stage, you'll notice that price is stopping slightly, very slightly, but stopping at higher prices each time, okay? So here, then here, then here, then here and here. So you could call these equal or you could call them slightly higher. What's actually happening there, if you imagine it as people, is nobody was sure here whether it's going to be the bottom, so they just let it happen. They let the squeeze commence. That's just market makers squeezing the retail and whoever. And then it comes down again. At this point, some people are willing to buy, so they jump in. Then we recover and we do this, and then we dip down. Everyone knows what this type of pattern means, so they buy, and it's a short squeeze. So again, they're happy to buy there. And then they see price bleeding down again. This is what you'll always see me mention in the group when I say low momentum. This is a super low momentum sell-off. To break down through all this, you're going to just have to nuke, right? You're going to have to go straight down, but they don't. They go super low momentum. So again, people are willing to buy here. They say, okay, I've been buying here, I'm just going to buy again. 40k, nice round number, let's buy. Price impulse a little bit away, and then eventually it makes its decisive move, breaks market structure above, and that's then when you see moves up like that. And basically now, the big players, the funds, whatever, the markets, if they get filled at 40, then great. If they didn't get enough filled at 40, then they just have to bite the bullet. This is where you see people starting to limit chase, all right, which is where they move their limit orders up to try and literally chase the price. So say they got 75% filled down here, but they didn't get it all done, and price moves up. They're like, shit. So they set their bids here. Let's try and get some more at 40. And then price comes down, and it goes higher. And it goes down, and it goes higher. And it makes higher highs and higher lows. And they're like, fuck, we're going to have to move it up. So they move it up to here, trying to catch wicks. Then it keeps going up. And they move it up, and move it up, and move it up. And that's why you see price moving up and up and up. Price moves up like that because the orders are moving up. People's bids are moving up. And And then eventually we reach a point where bullish fully takes over and we go higher. So what that looks like on the tape is this. When you're at these key levels, like here, you're starting to see some spot selling come in. You're seeing like Bitstamp, which is the B, and Bitstamp's like a pretty small exchange in terms of volume. But I would always look at that and say, okay, if there's Bitstamp buyers and sellers, that's a pretty, that's something I would pay attention to because they're quite rare. So Bitstamp are selling, Coinbase are selling, and there's some pretty big sells coming in at this level. So they're trying to keep price depressed, basically. They're trying to push price down so that if this is bullish, so that they can reaccumulate more. There's no reason to break out of this accumulation range too soon. They're happy. The whales can keep it in here for weeks. Remember, they play the long game. There's no rush. And eventually what you'll see is we've had some volatility. We've had the big wick down right up to here, and then a dump down here, and we've had a wick down and a move up. But what you'll see in a compression pattern is volatility disappears. And what happens when volatility drops, you get volatility, compression, expansion. Okay? So we've had our volatility. We've got volatility on the way down. We've got volatility here. This was a nice move. Say you're a scalper. This is a 58.5 up to 61.5. That's a 3K swing. That's a great move for a scalper. Catch that bottom and sell at that top. And then they try it again. Maybe they get this one, but again, way less rewarding. You're getting 69 from 59.1. You're cutting 40, 50, 30 or 40% off your total move. And then you get one final bit of impulse momentum, but again, it's not as far. You might get 58.5 to 60.5, so you're getting a bit of a move. But you can see that apart from that one wick this morning, volatility is disappearing. So unless it's all done and we break out now, we're going to end up in an even lower volatility compression pattern where we go down into here and there's no chance to trade for scalpers. And basically, I wrote a note on this in the group. This is the point at which, from, let's say here, from 11:45, 12, from midday today, we've had no volatility worth talking about. So if you're a day trader, okay, you trade obviously on a day-by-day basis, and say you missed this move, you're now waiting for the next move. Okay, well, since 12 o'clock, so for the last 5 hours, there's been nothing worth trading, no volatility. But you're a fucking degenerate gambling addict, because this is who get wrecked, by the way. We're talking about the degen, day traders who can't sit on their hands. So what do? Well, they catch along here and they fucking lever up. And they're trying to take this high out. They're just trying to get a really short move, 59.5 to 60.5. All right? But instead of getting a 3K swing, they're only getting a 1K swing. So what do? Well, they lever up 3x. So not 3x, I mean 3x, like 3 times as much as they would have, because these guys are always levered anyway. But let's say a typical trade here would be 3K swing, a 3K move on a scalp. And they might use, let's say it's just a retail degen, they use 10x leverage, okay? And they're typically getting a $3,000 move out of that. Then we get to here, whereas only a $1,000 move, they're going to use 3 times the leverage because they don't think in terms of percentages, they think in terms of dollars. And if they were used to putting 1 Bitcoin on here and 1 Bitcoin sell here and they're making $3,000, then if they're here and they're trying to move the market $1,000, they're going to have to put on 3 Bitcoin to make that same $3,000 that they're addicted to and that they're used to. That's exactly how these apes think, and is how you should be thinking to counter trade. So what do you do then? What does that create? The market makers know this. The funds know this, and whoever else knows it. So what are they doing by suppressing the price? They are inducing more people to use more leverage because there's a lower volatility. Okay? If the market moves less, you have to either accept the fact that you're only going to get a 0.5% move instead of a 3% or 1.5% move, or whatever it is, okay, on your scalp, or you're going to use leverage to make up for it. And that's what they do, because they're the same greedy people as always, and they use leverage. So what happens? We compress into here, we chop around, we've this really messy market, okay, for the next, whatever, few hours. And then eventually, the leverage is built up to such a point And if they can drag this on for days, it's much better. And the leverage builds up to such a point that there's a huge amount of liquidations to happen, and that is then when you'll see the big move come, which will be coupled with a lot of buying or selling on the tape. So very obvious here at the moment that price is going down. I said this earlier in the video, that with the Coinbase sellers coming in, especially in price being where it was at that level, they were probably going to cause a local, like a mini top. And that's exactly what we're getting. We're going to compress down now into a pattern. Okay, we're going to go probably take out this low and then just continue to range in this low area. I would see this typically eventuating in upside, because when it compresses like this at the lows in a bearish looking manner, it just induces more people to short and more people to sell. It doesn't really induce people to buy. Okay, people want to buy when the price is already going up, because remember, the people on the wrong side of the market are the bad traders. So they will have waited for this to happen, and then they would have bought and say, oh, I'll buy here and I'll put my stop here, which obviously puts this stop at risk of getting swept, but whatever. But they'll buy after the impulse. Okay, so what do? Well, as price grinds down in this slow compression, what are they going to do? They're going to sell. They're either going to break down trade as a sell, or they're just going to sell their own bags. All the same, a sell is a sell, and eventually they'll get wrecked. The price will go against them and it'll pump, and then they'll be forced to FOMO in again. Right, so covering that then. So now, if we're looking at this, what I said a minute ago, comparing spot to derivatives, so we can see spot are dominant selling, derivatives are buying a bit more. They're still selling, but they're also buying kind of more than spot are. So again, we're in more of a derivatives-driven market at the minute. So short-term bearish. I'll be expecting short-term downside. What next? Well then, how to interpret the tape? I would say a couple of things you want to look for. So when you see these $1 million and above orders coming in on Binance and on Bybit, you'll be able to spot them and understand who it is. The most obvious one is the Bybit $1 million spammer. So if you follow me in the chat, in the threads, you'll know what I'm talking about. There's a Bybit market maker who basically spams in $1 million bids and $1 million sells, $1 million buys and sells at key points that kind of, well, sometimes they do it in the middle of nowhere, but usually at key points at highs and lows. That's toxic flow, okay? And when it's in the middle, it's wash trading. And it's just fake volume to make it look as if price is moving. So, because the market makers know, and the big traders know, that everyone has access to this amazing platform called Agar, which is free and gives really a great insight into the market. But this is also like anything else; it can be gamed, and that's the point. We can see the spammer coming in here with his $1 million sells. So this is Bybit here on this column. So you can see them, and they're always bang on $1 million. So someone like that is, if you look at that and you see it, you don't look at it and say, oh God, there's some informed trader who wants to sell $1 million contracts on Bybit. It's not. It's typically the same person who is not. They're not trading directionally. They don't have a directional bias. They're trying to move the market in order to grab liquidity, or basically to psyop traders as well. So a lot of times you'll see it in the middle of nowhere. So if when prices like trading here and it's doing not much of anything, they'll start firing in like $1 million buys. Okay. And the reason for that is that people who just watch the tape and think that green means up, red means down, they'll just look at that Bybit guy smacking in $1 million buy orders, and they'll think, well, Jesus, this guy's got, say there's 10 of them. Well, he's just put $10 million on in buy orders. He must know something. I'm going to buy too. And of course, price goes nowhere, and then it eventually reverses and wicks that stupid retail trader out. So that's what I would call kind of wash trading, or just fake volume, because that's one to be mindful for. Bybit's the worst for that, followed by Binance. Okay, so Bybit's here, Binance is here. Binance, very similar for wash trading, where you'll see a lot of buys and sells of the same value. So you'll see a lot of $400K buys, and then immediately accompanied with a sell. So that's just inflating volume artificially. All right, many reasons for that. Just to get the exchange figures up is obviously one. Tax purposes, wash trading, so every trade is a taxable event. So some people may want that, as in, depending on the tax in your jurisdiction, if you do a $1 million buy and $1 million sell, and you sell and buy into your own, and you end up basically flat, you've paid some fees or whatever, but you can then claim, on your tax return that you lost $1 million. Okay, you can say that the $1 million whatever you bought it, you did one order with $1 million and it lost, and the other one whatever just went flat or whatever. You can say you lost both ways. Basically, is what I'm trying to say. You can write it off because you can put the $1 million bid and the $1 million buy on one account, and the $1 million sell is basically the sell wall that the offer on the other account. So, but anyway, it's money laundering, tax evasion, whatever is one reason, and fake volumes the other. Volumizers is what it's called. So Binance and Bybit are the worst for volumizers, which, as the name suggests, just add volume to the exchange. I don't see that so much on FTX. I see there's occasionally wash trading on FTX. BitMEX, no, hardly ever. And Kraken and Gemini, never. Deribit, hardly ever. Coinbase, never, because it's a spot exchange. So what you're looking for with that is just aberrations. You're looking for things that are out of the ordinary. You're looking for things to, again, just like trading, just like price action trading, you're trying to spot patterns. We're pattern recognition, traders. That's what we are. Traders are pattern recognition machines. We're looking for these reoccurring and little nuances that other people don't pick up, or that you pick up faster than them, and that's your edge in the market. That's the whole point of the tape, is to understand the characteristics and the character of the market, who does what it means, and being able to discern what's happening on one exchange versus the other. All right, so like, I know personally, for example, that a $1 million buy or sell on Bybit doesn't mean anywhere near as much as a $1 million buy or sell on Coinbase. Okay, so I then also have this layout where I have each exchange and a combination of them basically at the bottom. So I have spot on the left. So this is FTX and Coinbase spot. Okay, the two most important spot exchanges in my opinion. All the buys and sells for those come in here. Okay, anything over 100k, and it's just more of a overall view. This one's okay to have 100k as the lowest because they don't typically have a huge amount of volume in either of them. And you can scroll down through it and you can see what's happening. So they've been fairly balanced, more buy dominated when we were around 60 and below 60. Since we got above 60, there's been some spot selling. So again, I'd imagine if we dip back below 60, it'll flip back to buy-in because we're really in a balanced market here. This one's FTX perpetuals. Okay, so FTX perps. Again, a good one to follow. They have a pretty good directional bias angle on the market, and you can see, okay, buys and sells again, fairly neutral, not nothing out of the ordinary. Binance, as I said, that's Binance. It might be Binance Spot, is it? No. Binance, it is. So this is Binance Spot market. Okay, so it's Binance Spot. BitMEX. So as you see, just when we were talking there, big $3 million buy order came in on BitMEX. That's quite out of the ordinary if you scroll down through. And you see there's some big ones as well. So someone's accumulating on BitMEX, okay? Especially when typical signs that are like these ones where they're coming in close succession. That's probably the same person. It's very unlikely to be different people. And with that, of course, you have these ones which are the same size, and then you're backing that up with another one a bit later with a 3 mil order. So that's pretty clear to me that that's the same person. So someone's accumulating pretty heavily on BitMEX. They're quite high order sizes for BitMEX. Now, you have to remember what a market order is. A market order is a taker in terms of liquidity. Okay, so if you put a limit order on the books and you want to sell, say for example, That's 50 BTC. Okay, that 3 million order. If you wanted to sell 50 million BTC, you would have to put it on the books at 60,165, and then you'd have to wait for the guy in BitMEX to come along and put in this $3 million buy order at the market. So he has to come and take your order off you for it to execute. So this is the other big misconception with Agar and order flow and tape reading, which I'll get into in a sec, but I'll just quickly say that obviously this is Bybit, and at the end here, I personally have Deribit, which is the D, and then the little fucking weird caterpillar, whatever the fuck they have, is Kraken. Okay, Kraken used to be a bigger exchange than they are, but they're still quite a useful exchange because they're like there's quite a bit of US investors on it, some institutional investors and some OGs. So again, anyone who uses Kraken's pretty informed just to even know what fucking Kraken is these days. So as much as they don't have a lot of volume, again, if they're doing something pretty out of the ordinary, big buys, big sells, they're worth looking at. Okay, so then that's basically I then come down and look. So what I do with these is I come down, I scroll down, and I just kind of scan through them. Okay, I'm gonna get them all back to the top, scan through them all at once. All right, and it's the way Agar the way it scrolls is super annoying because when you scroll to the top, it then scrolls you on up the page. All right, so this is them all live and up to date. And we can see now, just at this very second, we had some big buys come in at FTX and Bybit. You saw that, yeah? No one else did anything. Coinbase and FTX Spot did nothing. Binance Spot did basically nothing. Neither did BitMEX. So that was that little flurry, and you can see now it's FTX basically driving the market here. So if you're watching this, and I would recommend a second screen for this kind of thing, you can then see, okay, FTX, you can see all this is FTX, a bit of Bybit. Nothing happening on Binance, nothing happening on X, nothing happening on Coinbase, nothing happening on Deribit and Kraken. So that's giving you an idea, okay, well, FTX they're chasing something here because that's market orders, so that's people coming in and aggressively moving. So what are they doing? Well, if you go and look at the chart, you can see, where are we now? We're here. Well, our FTX then, is there some liquidity FTX can see? Are they trying to hunt? Maybe they're hunting stops above here. Maybe there were some people who break down shorted this and they're going to get hunted. And it seems to be that FTX is the one hunting them. Maybe there aren't those stops. Obviously, there's no sell stops on Coinbase or FTX Spot because you can't. Well, technically there can be, but there can't be. Buy stops. There can't be buy stops on a spot exchange because you can't short. Okay, if there's not going to be the option to short on it. Unless you can short with margin on FTX, but what I'm saying is on Coinbase, you don't hunt short stops, okay? You don't hunt buy stops. So there's not going to be like a big wick above really on Coinbase, okay? Typically, of course, it's like anything, there is, you can, so I don't want to speak in absolutes and say you can't, but I'm sure you understand what I mean by saying that it's derivatives exchanges where you hunt stops, okay? On spot exchanges, you can hunt stops, but typically to the downside. So somebody might have bought Bitcoin and they put a stop below the low because they want to sell that Bitcoin, the spot Bitcoin, if price goes down there. And yeah, you can hunt those stops. But typically, we're talking about leverage here, leverage traders. So that's why you're looking at FTX, Binance Perps, Bybit, BitMEX, and all that. So what I just saw there was indicating to me that it's now for this little micro period, and again, you're a scalper, this moves minute by minute, but this minute, as we speak, FTX are moving the market, followed by Bybit. Okay, so FTX are hunting something, and Bybit are kind of always hunting something, so I'd expect that to be the case. And they're going to be the ones who push it, because when we're in the middle of nowhere, Coinbase have no interest here, Spot, Binance Spot have no interest here, so who's going to move the market? Well, again, remember, when you're in a period of or an area of balance with low volatility, you're looking for price to move to an area where there is liquidity. So on FTX and Bybit, you know that there's going to be, first of all, breakdown shorters who put their stop, terrible place to put your stop, within a range. You want if you're going to be, if you're going to do it, you need to put your stop there. Even that's bad. But anyway, putting it here is suicidal. But people do it. So you can see here what we're going to do. We're going to come up, take that stop, and then probably reverse, or maybe take that stop, and then we can continue on for the ones up here. But you can see now that when you're watching price action on one screen with your candlestick chart open like this, you can then see in here that it's FTX and that it's Bybit moving, okay, and the others are doing nothing. What does that tell me as a trader? That tells me that we are going here. I would be extremely surprised if we don't take out this high, because it's clear, it's plain as day to me that there's buy stops resting above there because of the people who are moving the market. We've got derivatives exchanges buying up in the middle of nowhere, basically. They're buying up here, and they're buying up here because they can, you know, if it's Alameda or whoever who can see the order books, they can see where the stops are. And I've seen this a million times. We'll probably just wick it and then come back below. Whether we go lower then after or whatever, I don't know, but they're being hunted. So unless some aggression comes in massively on the other side, like some spot dumping comes in, I would say we take out that high, whatever, in the next, whatever time, 20 minutes, whatever. So that's the overview of all the different exchanges, what they do and what it means to me, and how I interpret it. Then the final thing I want to touch on, and it's quite a long video, but it's a really important one, and it's quite a in-depth lesson, and it needs to be, because reading the tape, and again, I'll say this, that reading the tape is not something that you can learn from a video. I'm showing you this just so that you know when you're looking at it, just that you know what you're looking at. But the only way is to just watch it for weeks and weeks and weeks on end and really get to understand. I always say is the market has a personality. You need to understand the personality of each exchange and of each person. Like, I can even see now, like obviously I don't know for 100%, but I can see an order come in and say, that's Alameda if it's a certain type of FTX order. I can tell what market maker's doing it. And I can tell the difference between market maker flow and real flow. Because when you just, it's one of those things, it's hard to say, but when you look at it long enough for fucking months on end, like I have, constantly, you can begin to discern these things, and then that in and of itself is edge. Okay? There's days that I come in, if I'm really wanting to, you know, if I'm keen on scalping for the day and I feel there's going to be volatility, I can scalp just based off Eiger, just off the sound of it. You can get to a point where price is at the lows, okay? Say it's at an area of lows and the tape is fairly quiet, then you just relax, you just wait, and you know that a nuke's coming, or not a nuke, but you know that it's going to wick lower, and you just wait, and when price then wicks lower, listen for what happens when it goes below the lows. The tape will pick up, it'll start going crazy, there's a lot of buying and selling happens, mostly selling because people are getting stopped out or breakdown shorting, okay? And the time you want to go long, you don't go long just when it breaks the lows because it could keep nuking. Whenever you hear the tape slowing down, and we're still below that low. So if we're down here, okay, it'll sit, because people overreact as well. When you look at these bottoms, they actually take a few minutes to play out, okay? So like here, for example, this bottom, all in all, took 1, 2, 3, 4, 5, 6, see to here, 6 or 7 minutes, okay, to play out from the time it went below this low. So what I'm listening for is the second it goes below, okay, and this is real alpha here. Do nothing when it's doing this because price is low volatility, it's crabbing, it's at the lows. You can see there's lows here. You're like, okay, well, if this doesn't sweep, I don't want to be in the trade anyway. So I'm either going to get a sweep or I'm not going to trade. You don't have to take a trade. You're not a fucking addict. You don't have to take a trade all the time. But what you listen for is price starting to go down, okay? Price breaks this low. You'll hear the tape pick up. You'll hear it going ping, 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 you know, all that typical noise as a lot of buying and selling happens. And then it goes down, so that's 1 minute, and then the next minute you're still ping, 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 and then the next minute, and in this one here, you will have started to have heard, it's slowing down. So it's going from like ping, 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 down to like just ping, 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 and you're like, okay, that is the equivalent. Imagine it as the RSI losing momentum, okay? It's a momentum indicator. The tape is a momentum indicator. You start to hear that sound slowing down. You're like, all right, doesn't mean that the bottom's in, but it definitely means that the selling's stopping for now. So if you're really aggressive, you could put in maybe a quarter of your order then, just buy a quarter of your order. But then what you want to hear is that selling start to turn into buying. So when, again, if you wait for this next minute, you hear that buy, 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 and it pings up, and that's just that little flurry of buying. You can then, I wouldn't necessarily buy in then, because we see this all the time where it buys up and then it drops again. But you don't have to, again, the moves all the way up here. You don't have to buy all of it at the lows. But then you hear price. What you typically would hear at this point would be price beginning to, if it's going to go down, okay? When we were here, just remember again, when we were at this price a minute ago, there was heavy selling. It was ping, 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 selling, okay? Then we lost momentum. We came up with a bit of buying, and then we stopped, because we'll usually, for this candle, we just have been sitting still. We didn't go up, we didn't go down really. But what you want to hear is either nothing or slight buying. You're hearing just some buys come in, but no sells or no heavy selling. You're like, okay, this is where the market, again, should have started selling, and it didn't. So you can get aggressive and put another quarter on there. And then, of course, wait for the real impulse, and then look to get the rest of your order on. That is how you can use just the tape to scalp. So what we're doing now is, I'm not going to go through that the exact moves that's playing out now, but that was just a little touch on the sound of the tape. I'm saying when you listen to the speed of the tape, fast and slow, you can tell what's going to happen, or tell with a decent degree of accuracy what's going to happen. The final thing that I want to cover is you need to, and this is probably the most important of all, you need to remember that green does not mean up and red does not mean down. Okay? In general, yes, if you say, like, you'll see whenever price is pumping really fast and dumping really hard, the display on the screen will be all green and all red. Okay? All green if we're pumping, all red if we're dumping. That does not mean that green orders always make it go up and red orders always make it go down. You have to remember that for every buyer there's a seller, and for every seller there's a buyer. This only shows market orders, okay? Not limit, market orders. That means the taker. So someone's coming in and putting a 492k sell order in, like they just did on Binance. Someone's coming in and putting a 260k buy order like they did on Coinbase. But that is going in, that's going sent into the books. Okay, you can see that at $60,050 there was over 500k there just sent in straight away on Coinbase, but it didn't move the market. Okay, the market didn't move appreciably. Might move up slightly, but it came back down. Until you get either thin books or large aggression, green doesn't mean up and red doesn't mean down. Now we're seeing aggression. Okay, you can see the market starting to move because we're getting some big buy orders coming in, and price is going up. So that means that, look at Binance here. These are all Binance, all these big ones. So this is the same person on Binance who's starting to push the market. So it might be some toxic flow, it might be a market maker, or it might be an aggressive trader. But you have to remember that if you put a $10 million, let's say like a big order, if you put a $10 million buy order in and price didn't move, that's bearish. You have to remember that. Okay? In general, that would be bearish. Because if 10 million doesn't move the market, what does that mean? That means there was absorption by sellers. And typically, whoever's on the sell side, okay, so whoever's on the limit order side, they're going to be the ones who have the most sway in the market, okay? If you have set your orders and left them and they're resting on the books, they have to come and get taken. If you're patient enough, and say it's big money you're trading, and you're patient enough to wait on your orders to fill, you're typically going to be right more often than not. If you patiently wait with your bids below the lows, you'll get rewarded. If you chase it, like these are chasing this, these are at the market. If you're chasing price all the way, you're typically going to be right. If you're lucky, you'll be right as much as you're wrong. You'll probably be wrong more often than you're right. That's why, it's like anything. We all know that in trading, the more patient you are, the more often it seems to work out. It's simple as that, okay? Market orders are the opposite of patient. They are the most impatient order you can have. So depending on who's trading it, it can be a good sign if there's someone who can move the market. But otherwise, just look at it and say, okay, green does not necessarily mean up, red does not necessarily mean down. Because for every green order that's on Agar, which is a market order, that means there's a red limit order, so there's a sell on the books. And if the sell is typically the more important patient person, then you could almost say that when there's a load of green, price is going to go down, and there's a load of red, price is going to go up, because that means there's aggressive selling into resting bids, and there's aggressive buying into resting offers. So, and a lot of times you will see that. That's one of the more important uses for agar, is watch when there's a high speed tape, when there's a fast tape and a noisy tape at a key high or a key low, and price doesn't move. Okay, so it's a key high, there's a lot of buying, an active tape, and price doesn't go much higher. We're probably going to go lower. Like the tape just got pretty active there. That was look at this. That was a lot of pretty active buying on derivatives. And where's price gone? Price hasn't moved. All that active buying was in here. Price hasn't really moved yet. There's millions. There was a few multi-million dollar bids went in there. So unless that similar type of aggression comes in now, which we're seeing a little bit of it, but if this doesn't break this high soon, then it's going to reverse, because that's all trapped liquidity then. That's a lot of trapped buyers who couldn't get through the sell wall. So, but in this particular instance, like I said earlier in the video, we're going to take out this high, because that seems to be where obviously where the stops are going to be resting, so we should take that out. But in a more, if you go to a higher time frame, you zoom out a little bit and you wait till we get to a key swing point, and you wait for it. So where I'll be looking in a sec, when I get off this video and I'm looking for my next trade, I'll draw my box above these wicks. Okay, so you see the 3 wicks, wick, 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 and then this order block. Obvious resistance, yeah? Well, at the moment we're in the middle of nowhere, so we don't diddle in the middle. We don't trade here. Market makers trade here, which is why they're trying to push it. Because if you look at all this, we've grabbed liquidity below. So what are we going to do next? We're going to grab liquidity above, which will be in this box. So when we get to this box, and if you want to be not stuck in front of the computer all day, just set an alert and say add alert and put a note on it. I do that. I do this from time to time. I just say jump on agar. Okay, so if I'm not at the computer, I'll just wait for the alert to ping. I'll jump on here. I'll turn agar on, and I'll listen. And I'll listen for 10 minutes, because look, these tops. These are 15-minute. These are 15-minute candles. These tops take time. Okay, so if you go to the 5-minute, you'll see even clearer. Each of these, like this one is 5, 10, 15, 20, 25, 30. If you can't take a trade in 30 minutes, there's something fucking wrong with you, okay? Yeah, maybe these ones you just get a wick and a wick, but we know this is the resistance area. You're going to have time. Let your alert ping come in, load up agar, just chill. Tops don't happen in a second. You might get a wick that happens, but you don't have to catch the wick. You didn't have to catch this wick. If you got short here, you still did well, okay? So you want to get your key high, your key resistance area, set your alert, price comes up into it, and then be like, alright, well, what's happening now? If you're starting to hear a lot of pinging, a lot of that, you hear it now, I'll turn it up. If you're hearing a lot of that, yeah? Ping, 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 and we take out this high here, like I said we would. You'll either hear a lot of pinging now and we'll go much higher, or you'll hear a reversal of the sound and we'll go lower again, because we were just trying to take that liquidity. So what are we going to hear? Not listening. Starting to hear some selling come in. More selling, heavier selling. Price is starting to dip back below. There we go. Selling. Oh. Selling. We go in here and we'll see a lot of selling going on the ribs. Just like I suspected. When I said earlier in the video, FTX and Bybit are probably moving the price up here to grab some stops. So anyone who shorted this breakdown has just had their stop taken. The chances are now we go lower. Because unless there was real intent to go higher, that's all that was a stop run. Now aggression might come in and push us higher, but it looks like we just took that stop. Now we probably rotate lower, and what do? We go looking for liquidity this side, and we catch that. That's how the markets move, you know, on a minute by minute basis. It's only when they get to key areas that real people step in. The rest of the time it's just market makers. Let me turn it down again so I don't deafen you. You get the key areas, your highs and lows. Where is my color box? These are the areas where you want to be listening to Iger. Okay? Set your alerts. And listen. And listen and listen and listen. When it gets up here, if you're hearing the tape going crazy, going loud, but price isn't moving up through the known resistance, you want to start looking for shorts. Similarly on the downside, if we don't hear aggression and pushing price down through it, you want to look for longs. Then if you're going to be a really aggressive scalper, like we just mentioned there, you could have caught this short, because, and that would have been one that I would have took without any confirmation other than what I just said. Wouldn't have needed to wait for an under-over pattern or anything like that, or an over-under on that side. I would have just said, because when we saw it here, and we looked down here a minute ago, and we saw FTX moving it and bit by bit moving it, and nobody else was interested. I was like, okay, they're probably hunting the stop, and I would have just set a sell order up here, okay? And you just set a blind sell order, literally one tick above the high. Now this is, by the way, this is FTX spot, so it's going to be much clearer if you go into the, there you go, much clearer when you go into the derivative, because obviously they're not hunting stops in spot. So you would have just put your stop, or put your order one tick above, all right, and then just waited for it to trade the come on. So like here, you can see you would have got filled. And then what are you looking at as a scalp? Well, as a scalp, you would have put it on, price would have reversed back below. If you want to be super aggressive, then you put your stop there, and you want to take, obviously we're going to take out this low next because price moves for through liquidity. So there's like a, oh Jesus, that's an 8R, but obviously a super tight stop. You know, you're probably going to take a bit of, you probably put it above a local high, like here. So I wouldn't see a price coming up above that. If it does come up above that, we're taking out these highs, and the idea is only taking out these ones. So there's like a 2.4 hour trade just based off of Iger. Okay, wait for it to get to. Now you have to the only reason that I spotted that was because I've listened to the tape and watched tape so much that I knew that when FTX and Bybit were both aggressively buying and no one else was doing anything, and it was down here, that didn't make any sense other than that we were coming up here to grab liquidity. So after a while you'll be able to spot that too. It's not 100% foolproof. It worked well. It worked out nicely for this tutorial that it worked well. But that's one way you can use it. There's infinite ways you can use it, and if you can figure them out yourself, that is your edge, okay? Now, what is most likely to happen then? You also then can use Iger to think, okay? So we've taken out a high like that, and we've grabbed liquidity and we've reversed, okay? So I would look at that and say, if we go back to a 5-minute chart, I would look at that and say that this wick should never have happened. Okay, so this was the true price. This is where we were consolidating. This was manipulation to run the highs. And now we're going to go lower, and we're either going to reaccumulate here, back to where price was happy, and then it might go higher as a real move, or we've grabbed liquidity, and now we go lower. First stop, so wick in this. If we wick that and come above, then we've taken out the stops on both sides. More likely, because that's quite a tight range, more likely we're going to head for these stops of anyone who longed this. Okay? And price will come all the way down, wick them out, and then go higher again. Me personally, I'll be scalping that. I would be waiting, and I will set an alert that when price comes down here, I want to get on, jump back on Iger, wait for price to break this low, listen to the tape, how does it sound? If it sounds good to me, get long. Try and get a bit long under the line, but say we get most of it on here. Stop below the wick, wherever it ends up being. I wouldn't imagine, it wouldn't be a long wick. It's just going to take out these lows, but whatever. And then your target. Well, where's your target? Again, highs. These ones and then these ones. So target 1 up here, That's the 3.5 hour. Target 2 is a 4.5 hour. Great trades, really good scalps if you can get them. And that's what's going to happen in this area. Not saying that exact move, but in these areas of low volatility, they have to engineer liquidity. So they're not going to take out any big highs yet. So they have to make a high, take it out. Make a low. The amount of people who've long this is going to be crazy, right? You know this. Big impulse earlier, price consolidates. Everyone's going to have gone long here thinking, oh, this is the one. They're all going to get stopped out. And then we might get the move. All right? So I hope that helps. Shared several implementable strategies that you can use right away. By no means is that the extent of how you can use Agar or how you can listen to the tape or read the tape. But it's a good starting point. And from here, all you have to do is put in the screen time. Okay, there's nothing that will substitute screen time in terms of your development as a trader. Just get on it. You don't have to trade all the time. I would recommend not trading so much. Trade small stakes. Demo trade with, if you're using Agar, demo trade is a good way to start. I know people say that if you don't have money on the line, you're not real trading. You're not going to learn. I was like, yeah. The problem with that is you're going to go broke because people aren't good at position sizing. So even though they say, oh, I'll just trade $100 at a time, they don't really. They end up putting on 1,000 and they just get wrecked. Because you're not going to know this. Like, I make it look easy, but that's only because I've got endless hours, like thousands of hours of listening to this shit. So unless you do too, you're not going to be that good at the beginning. And even the fact that that one there worked out exactly right, that doesn't happen all the time. I don't make perfect trades all the time, just off order flow and off the tape, okay? So, what's next? Well, go small stakes or just paper trade because you're only testing, okay? You're going to test it and say, I've got a theory that every time we go into a resistance zone and we get spot selling but derivatives buying, and the tape sounds slow. Okay, so there you're starting to build a system. Okay, so imagine your rules-based system. Rule 1, in and known resistance. Rule 2, spot or selling. Rule 3, derivatives are buying. Rule 4, tape losing momentum, as in the tape isn't sounding as fast to the upside. There's 4 rules, and can you tick them off? Tick, 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 tick. Equals go short. And then test that. Do it 10 times. Test it 10 times, record the results. How many do you get right? How many do you get wrong? How much of a swing would you have had? Okay, if you went, and this one's actually reversing nicely, so we might get to take out these highs. But anyway, I'm getting a bit sidetracked here. Like this zone I had on the previous chart, price into resistance, 1. Spot or selling, 2. Derivatives are buying, 3. Tape is slowing down, 4. That's a 4-rule system, okay? Equals sell. And then you sell. Stop goes above the local high, which would be this one, because we're into a known resistance. That high shouldn't really get taken if all this is happening where you want it to, okay? And then target will obviously be like a local low. So if we went up here and reversed in this in resistance, I would be targeting this. And then second target that, but more likely this. And then just say, okay, let it play out, and then record the results. And say, okay, if you had 10 of them, and 6 of them worked out with that rule set, that's a 60% hit rate. And then you need to work out, okay, did it reach and sweep the local lows? And you go, yes, yes. And say it did in 4 of them, and it didn't in the other 2. The other 2 you would have had to cut at, say, break even or a slight profit, so just call them break even. But the 4 of them did reach all the way to the target. Work out what those were. Say it was a 3R and a 4R and a 3R and a 4R. So it was a average of 3.5R. Then work that out. Then you say, okay, 4 winners at 3.5R each. That's 3, 6, 9, 12, and 2 is 14. So that's 14R. Okay, and you had 2 break even trades, so that's 0. And then you had 4, so you had 4 winners, 2 break even, and 4 losers. That's 4 losers at minus 4R. So there is 10R just from that strategy. Okay, you might have to pause and rewind that. I hope that makes sense. That's how you test the strategy. So within that, you've just found out that you've got a potentially profitable strategy. You know, you had 14 hour of winners, you had 4 hour losers, and you had 2 break evens. That's a 10 hour. So if you can repeat that over and over and over again, that means for every 10 trades you're doing, you're going to make 10 hour. If 1 hour for you is 1%, that means you're going to make 10% every 10 trades. You're making 1% per trade on average. If your 1 hour is $1,000, that means you're making 10 grand for every 10 trades you can make. If you can get those, then can you find those setups enough? Can you get 1 setup a day? Can you get 2 a day? If you can get 2 a day, Monday to Friday, there's 10 grand a week. Okay, and that's how you can build up a scalping and day trading system and scale it out to actually make money. All right, so that one's definitely going to need to be paused and re-uploaded. I might actually cut that as its own separate clip, just to as a little. I might put it in the cheat sheet section. So anyway, I'm going to leave it here. That was a long video. Take your time to go through it, re-watch it, implement the things I've said. Play around with it. Do your own as well. Not everything I say is gospel. Not everything I say is... There's stuff I don't know yet. Not perfect. Find out things on your own. Find your own alpha. Find as much edge of your own as you can. And you'll do well. All right? Good luck. Cheers.